G'day everyone and welcome back to Pete's Investing. Today is May 11, 2023. This is the US crude oil price update. We look at the weekly, daily and hourly charts, and on the weekly and the dailies primarily our trend indicators. So I'll go through each of these. So first off, on the weekly we've got the triple moving average of the price chart. It's a moving average 3, 5 and 60. That's in a downtrend. And the CCI 150 moving average 5 and 50. That's also in a downtrend. So it's giving us a bearish signal. So predominantly bearish trades only. Now you'll notice the daily is giving a neutral signal, so avoid trading. My recommendation is to ensure your weekly and daily trends are aligned before taking any trades on the lower time frames. But also on the daily, we've got this support at 64.36 and resistance at 83.40. Now it's also been gravitating around these diagonal lines, and it looks like it's sort of bounced off from this key support area and broken through this first diagonal, and now it's sort of kissing this or treading along this this descending diagonal. So at the moment it's undecided, so avoid going long or short, even though the weekly is showing a bearish signal. This daily is giving us a neutral signal, so avoid going long or short. On the hourly, we've got further again, those support resistance lines. You can see those diagonals as well. But I've also drawn this divergence, this very slight bullish divergence on the CCI versus a bearish divergence on the price chart. Now, they don't always play out, but when they do, it's something to be aware of if you're in the trade. So potentially, if you are going short and you're in profit, this is probably a position I would take profits and get out of the trade. I generally don't trade these. Because sometimes they don't play out and it's a bit of a risky game, especially if in this case I prefer to trade the overall trend of the daily and the weekly as opposed to individual divergence. Having said that, if you go back a bit in history here, you'll see here there was a divergence on this period back here, a bearish divergence during that, lower lows there versus higher highs there, and that actually did break to the downside ever so slightly. So again, very cautious about trading these alone in isolation. Then on the immediately after that, it showed a bullish divergence on the CCI versus a bearish divergence, and that also broke to the upside as well. And the way you basically would probably, one way you could trade this would be to get the channel, draw a channel. So for example, during that period to those highs, when it breaks above the channel, that's when you would probably take that trade and go long. But again, it's a bit of a risky endeavor. Let's try that same exercise with this divergence. So had you traded this as a bearish divergence, that wouldn't have worked too well, because you would have had a very slight breakout below that there. And by that stage, this was telling you to go long. So you might have gained a few pips or points in that little trade there. Had you traded that going short. Anyway, just a quick divergence lesson. Lastly, I want to show you the this back testing I've run going back to September 21. Now, each of these blocks indicates an entry and exit of a single trade. Where it shows multiple steps, that's the average down approach, and this one you would have been in that trade for some time had you traded the whole period. Now, I'm not suggesting you trade the whole period. What we're saying is you only trade when it's long on the weekly and the daily, and trade short when it's on the weekly and daily as well. So during that period, for example, there, that big one, you would have avoided going long. Again, this is a long positioning program backtest only. There was no long positions during that period, so you would not have traded that at all. Even though the daily showed a long entry there potentially, I recommend going with the weekly and daily being in alignment. So during this period, you would have traded predominantly short periods. So again, as an example, those few weeks there, you would have traded, which was in aligned with those few weeks of the weekly. We were in alignment with the daily. That's where you would have taken the short trades. And you can see there, if you reverse this with going short, that would have been reversed, and that would have been a profitable trade during that period there. So anyway, to understand this and other trading ideas, subscribe to my Patreon page for exclusive access to weekly stock scans. We use the average down strategies. We scan for stocks, currencies, and commodities. Subscribe, like, and share the channel. Thanks for watching, and see you in a future video.